The battle for America's financial future heats up as the Fed's next move hangs in the balance, and Chicago Fed President Austan Goolsbee reveals key insights about jobs and rate cut strategies, while one calculation could flip tomorrow's policy.
Well, I will say two things. One, it's the first Friday of the month. We're sitting here on the quietest jobs day. So something's wrong with the universe. We didn't get the final countdown walk-on music, and so the Chicago Fed, not because we knew there was going to be a government shutdown, we didn't, but because we've been trying to get better real-time measures of what's happening in the job market, we've recently rolled out the Chicago Fed labor market indicators, and one of those indicators, we turn to 11 different data sources. We take the official data plus high-quality private sector sources, and one of the numbers that we keep is a real-time estimate of what will be the unemployment rate. So barring getting an actual unemployment rate, we released yesterday that the unemployment rate would have been announced to be 4.3%. That is unchanged and stay where it is.
Austan, I looked at that data and your methodology there, and it looks a little bit like you're California sober on that, in the sense that you have not really forsworn the official data. A lot of it's based on the official data. So
correct.
It seems like we're kind of cool in knowing
I totally agree.
Yeah, it's kind of cool in knowing what today might have been, but we don't know about, let's say, next week when we don't get jobless claims, although we are getting some state-level stuff. Goldman Sachs came out with a report this morning estimating that in the absence of two states, they think it would have been 224,000. But isn't it right, as time goes by, we lose contact with what we think is the reality?
As time goes by, it will get worse. There's no question the best jobs data in the world come from the Bureau of Labor Statistics. We need that data. We want that data. We can use what we have, which are private sector sources. We can look at the state unemployment claims and plug those into the formula. Over time, exactly as you say, Steve, it's going to get farther and farther from the truth. Even the private sector sources rely on the BLS data to kind of normalize and make their samples representative. But we fight with the army we have. At moments like this, where it's critically important that we're figuring out whether the economy's in a moment of transition, this is what we have. And thus far, it still continues to point to a pretty stable labor market, in my view.
So does that keep you on the trajectory you were on? I'm trying to think, and I don't love this metaphor because I don't even watch anything about planes and problems, but you know, you're at 36,000 feet, you're cruising at 562 miles an hour with some kind of tailwind, whatever you want to call it, and one of your screens goes out. Do you keep on the same trajectory, which right now the market believes is to cut interest rates?
Well, look, you know that Paul Volcker used to tell me our job at the Fed is to act, and the market's job is to react, and let's not get the order mixed up. So what the market expects is not in the Fed's mandate. What should be in the decision of the Fed are the economic conditions, unemployment and inflation. That raises the degree of difficulty when we cover up one of the eyes or put a screen where you can't see the data. I think everyone on the FOMC has to come to their own determination of what does it mean for the trajectory. As you know, before we got into some of the dust in the air, I believe that the underlying economy rates can afford to come down over time in a gradual basis, a fair amount from where they are now. But this uptick of inflation that we've been seeing, coupled with the payroll jobs numbers deteriorating, have put the central bank in a bit of a sticky spot where you're getting deterioration of both sides of the mandate at the same time. If the inflation looks like it's going to be transitory, and I say that word with some fear, then I think the employment side of the mandate would be dominant. But with that, you see this uptick in inflation, and particularly the uptick in services inflation, which is probably not coming from tariffs. I'm a little wary about front-loading too many rate cuts and just counting on the inflation going away.
On Wednesday, Austin, we heard from ADP, and something with the overall revisions of the BLS was used to sort of explain why it was such a big miss on ADP in the private sector payroll. Did you hear that? Can you explain that? Was it a big miss? Was it as bad as it looked, or was it just catching up with the revisions that the BLS numbers had already told us?
Yeah, and now we can't ask the folks at the BLS because we got a government shutdown. I don't want to weigh in on the revisions, except to say the BLS is the best data in the world, period. And all data, private sector and public sector data, because people don't like answering surveys and the response rate is falling, we're going to get bigger revisions. There's going to be more noise in all the data series. So the fact that we're in a moment where on immigration and on labor force participation, we've got some question marks that we don't know, mean that people should be wary over-indexing on monthly aggregates, which includes BLS payroll numbers. It includes ADP. If you over-index on that as a measure of the business cycle, you could make a big mistake. We saw that in 2023 and 2024 when we were getting very big monthly job growth numbers, and it wasn't a sign that the economy was overheating. It wasn't a sign of massive growth rates. It was a sign that population was changing in a way that we didn't understand.
Do you have a dog analogy? You got it. You only got two. Is that the sum total of your? You just. How about
Look,
this? Did you hear
data
this one?
dogs? It's always the same analogy. But one of the key rules of the data dogs is sniff every piece of data that hits the kitchen floor because it might be food.
How about